I found this on social media. It's someone named Brian Joseph Decker. He's providing daily investing tips. He's a realtor and a CEO of a financial group. And here he is talking about Donald Trump and his strategy with these on-again, off-again tariff threats. It's very, very insightful. Have a listen.
Trump is crashing the stock market by 20% this month, but he's doing it on purpose. And this is why Warren Buffett just said Trump is making the best economic moves he's seen in over 50 years. Now, here's the secret game he's playing, and it could make you rich. So why is he doing this? To push cash into treasuries, which forces the Fed to slash interest rates in May, and those lower rates give the Fed the ability to refinance trillions of debt very inexpensively. It also weakens the dollar and drops mortgage rates. Now, it's a wild chess move, but it's working. Now, you're probably wondering, what about his tariffs? Well, I'll tell you, it's a genius play. It actually forces companies to build here to dodge them. It also forces farmers to sell more of their products here in the US to bring grocery prices way down. We've already seen this with eggs. Now, remember, 94% of all stocks are owned only by 8% of Americans. So Trump, he's taking from the rich short term and handing it to the middle class through lower prices. Now, tariffs may seem like they're going up one day and down the next, but it's not wishy-washy. It's a strategy because investors hate surprises. So they sell stocks and rush into the safety of bonds. But mark my words, by summer, we will see Bitcoin and stock prices at a new all-time high.
There you go. That's Brian Decker. Jonathan, what do you make of that? First of all, let's go through this. So Donald Trump is seemingly very erratic with these threats about imposing certain tariffs. But this advisor is saying this is deliberate. He's trying to create uncertainty in the market, and he's trying to deliberately crash the stock market by about 20 points and forcing that money into treasuries. Does that part make sense?
It's an interesting theory, and I would clearly, to answer the question, bond yields have come down a little bit, but not very much. I mean, so they're actually month over month bond yields on the longer term, which 5-year, 10-year, 30-year, have actually gone up a little bit. And so on the short end, they've come off a little bit, and that's because we do have a little bit of slowdown in the economy. So his theory, it's an interesting theory, but I think a more reasonable way to answer and to sort of do a diagnosis of what's happening is Donald Trump is prepared to take some volatility in the stock market because he's making some big changes in terms of the economic funding model of the U.S. He is trying to change more over to tariffs and less on taxes and a whole host of things. I think they just have to be prepared for volatility. One of the benefits of the volatility, I would say, as the gentleman points out, is it can suck interest rates down a little bit. That is important. The Fed gives the Fed a little bit more room to drop rates. The U.S., believe it or not, has to roll over $10 trillion over the next 12 to 16 months, and of all their accumulated debt that's coming due. So that is a big challenge, and the lower the rates, the easier that challenge will be. But I still think what Trump's focusing on is really the bigger picture, the longer term bringing of capital back into the country. The gentleman also mentions that. That is very important as the capital comes into the country. I think it will help keep prices a little bit, more muted. That's very important also for the Fed to drop rates and also for consumers to spend more money. You've already seen a substantial drop in some of the food costs, food prices, just because of the reversal of policy, which is going to be very helpful, again, for refunding the debt and so on. So, I think the gentleman's talking, some of the stuff, can make sense. But whether that's the big picture strategy, I'm not sure you can overlay all of that on the situation. But it is quite the big picture. I mean, in terms of what Trump's trying to do, it is a big chess game. No one's done this before, to shift over to tariffs as a major source of income. That's not been the case now for decades. And I think the erratic nature is what throws people off. Is he really serious or not? What's he doing with this? He's been a bit bombastic. It does throw people off. It is causing slowdown in the economy. People are a little bit concerned. It's clearly in Canada. People are very apprehensive. They're angry. They don't know what's going to happen next. It's going to impact certainly our auto industry. And so it is putting people on their heels, and that is bringing rates down. No question about that.
Can you explain the mechanism? Like, let's assume that this analyst or Brian Decker is correct, and this is whether it's deliberate or not. The idea of creating instability in the stock market, forcing investors to flee the stock market and put their money into treasuries, as he said. What is the mechanism for that lowering interest rates?
Yeah, so what happens is people then sell stocks, and so they pull their money out of the stocks and they go somewhere where there's more certainty and less volatility. So then they start buying bonds. If you have people buying bonds, it bids the price of the bonds up, and that then automatically causes the yields to come down. And so there's an inverse relationship. As the demand for bonds goes up, interest rates come down. If the demand for bonds was to disappear, then people are going to demand a higher interest rate. The interest rates will come back up again. So that's the relationship. So it's a very real relationship. When people get concerned, they pound into bonds, yields come down, and that gives everybody a little bit of breath of fresh air and more room to maneuver, and the Fed to drop rates, which they'd like to do.
All right, so that benefits people trying to get into the housing market because that'll lower mortgage rates. That will also make it easier for the federal government to pay the interest on a $36 trillion debt. So from that standpoint, if that's Trump's intention, that makes sense, right? That's pretty sound.
Yeah, but you have to be very careful crashing, so-called crashing the stock market. That can also have other effects, and that's a very risky sort of business. I think that I would rather say that he's not afraid to have the market come under some pressure, and because he's making these changes, and he almost has to, Richard, because it is going to create instability. People don't know what the effect of these tariffs are going to be. You've already got Europe that's in a funk. It's not doing anything over there. They haven't grown like us because they've had the same mismanagement that we've had in terms of their politics. Japan is in a funk. China's in a funk. So when you're putting these tariffs on, you're creating that kind of instability. It is definitely going to be pulling down economic growth around the world for the time being, and that will depreciate the value of interest rates, and that will bring the interest rates down. So I think he clearly knows that, but I'm not sure he wants to drop the stock market and crash it. That has other large implications that you have to be very careful with, because that can also really hit consumer sentiment and cause a problem. And I'm not sure he necessarily wants to do that, but he's not concerned, I think, with a weaker market that will give him more flexibility. And the model's changing. I mean, they're trying to look at Doge. I mean, they're trying to cut government spending. I mean, what's been driving the stock market and a lot of the economic growth the last little while? It's all government spending, government. Now they're trying to cut that back. So inevitably, we're going to see some dislocations and some pressure. But if your spending's coming down because you're spending less with the government, that's good news, medium to longer term. Even if in the short run you lose some jobs and money isn't going into the economy, we've got to get the public sector down in size. We have to get it back into the private sector, or we're going to be in just horrible shape.
Well, fascinating take by this Brian Joseph Decker, and a great analysis from you, Jonathan. Thank you for unpacking that for us.
Okay, thank you very much, Richard.
Jonathan Wellham, President, CEO of Rocklink Investment Partners. Give them a call today, 905-631-5462. 905-631-5462. I did, and now I'm a client. You can also email at info@rocklink.com. Rocklink with a C. ROCKLINC. Hey, this is Richard Serrett. Welcome to my YouTube channel. Don't forget to like and subscribe.